For those of you that are listening and watching, one of the great things about dripping is when you reinvest the dividends automatically is that it forces you to buy more of something when the price is low and less of it when the price is high. And you don't even have to think about it. Hey, what's up, everybody? We are once again back with, dude, a listener, a viewer, a watcher. He's a watcher just like all of us. He's not a content creator. You can find him on Twitter. It's SCHD Stan back on the channel again for what is this, the third time?
Third time, yes. Yeah, third time. Third time's a charm.
Hell yeah. So we're going to get into it. We're going to talk about what you're buying, what's on your watch list, and you're going to give us an SCHD update for a nice little chat here. So just, dude, roll right the hell right into it. What have you been buying as of late?
And we talked about it before. What I always try to do is find really great companies, and when they, something happens and the stock price drops for some weird reason, and usually when it's a good company, they end up coming back. So right now, it's funny because I bought a share today of a couple of these companies. One was Deere, and I've just started with this. It was a new position for me, and I bought one share today. So it dropped down again. It dropped after earnings on outlooks. The interest rates have really hurt their sales. They sell big equipment, so people need to take out loans to buy it. So with these high interest rates, it's affected them. But, we're long-term investors. I'm a long-term investor. That's not going to be that way all the time. They're using AI and they're putting all this stuff in their equipment. That's only going to grow their margins. It's going to, it's going to make them more popular. I think it's a nice opportunity right now, because it's come down in price.
They just raised their dividend, right?
And they raised their dividend. Yeah, I mean, they have an excellent track record of their dividend too. Their 5-year growth rate is 14% right now. They pay a smaller dividend. It's a grower. It's a 1.6 kind of percentage right now. But that means that the share price has room to grow usually too. When you get those smaller dividend payers, a lot of times those are the companies not only going to grow their dividend, but they're going to grow, the share price is going to grow as well. So it's a nice one. I think a lot of the fear about interest rates and that sort of thing is already built into the price right now. I could be wrong, but it looks good to me right now. So I'm testing it out. I bought a few shares and we'll see how it goes.
Deere's a grower, not a shower.
Right.
And it's
I was thinking that, but I didn't say it.
We say it, man. We'll let it fly here. Let the freak flag fly.
Another one I like is Lowe's. Lowe's is one of my favorite stocks. It's always on my watch list. It's kind of in my top 10. I like companies that have a really strong return on invested capital. And if you look into Lowe's has like a 46% return on invested capital. It's incredible. It's basically saying that all the money that is invested in the company, that's the return they get on that money. It's like, that's amazing. That even means that you could probably pay more and it'll still work out. If you're buying higher, it's a sign of quality. So, and it's been down in the 200 kind of range. I look at Lowe's when it's under 200, it's a good value. And I try to buy in the low like 190s because I already have my price. You talk about that all the time. You get anchored to a price, right? And I think my average cost is under 190, 187 or something like that. So I try to get back down. I'm trying to change and try to say, if I've got a good company, I can buy it when it's over. You got to add to it at some point in a good company, right?
Dude, Warren Buffett, that's one of his mistakes he's used in the past is he said he's bought a company, but he has that price, that intrinsic value. And when it's gone a little bit above that, he would stop buying and he regrets not paying a little bit more for those quality companies. And yeah, dude, Lowe's 62-year dividend growth streak. That's pretty surprising. And it's funny. I do a lot of construction type work for my job. And usually it's Menards or Home Depot. But I've been going to Lowe's a little bit more.
It's a staple for folks who need, it's like Home Depot, Lowe's, you go either way. And Home Depot is a great one too. There's so much Home Depot already in SCHD. I tend to focus on Lowe's just to differentiate a little bit, right? But they're very similar.
Dude, that dividend growth for Lowe's, 20% 5-year CAGR and a 25% 20-year CAGR. They're starting to look like my Next Star Media up in this.
Right, they look at it. The starting yield is just over 2, so it's decent, not high, but decent. And like we said before, those are the kind that have the capital growth as well.
Yeah, and actually, I'll add one more thing. One of the things I like to look at when I'm buying a stock, and this is just just a warm and fuzzy. This is by no means a be all end all. Is when the dividend yield is above the 5 year average and the forward price to earnings ratio is below the 5 year average. And as you can see on the screen right now, both of those for Lowe's indeed are in that position. So just one more little thing, obviously, something to help you along to maybe push you over the edge, like somebody like me, to buy something more. So how many shares of Lowe's do you have, or how big of a position is it?
Yeah, so Lowe's, I've got just over 20 shares, and yeah, whenever it kind of gets a little under 200, I try to buy a few more, and that's the way I look at things. I kind of have like a target price, and if it hits that price, I look quickly and see, hey, is this something that's going to affect them long term, or is this just noise that's happening right now? And if it's not something long term, that it's time to buy when they hit your target prices. So
How hard and fast are you on that rule? Like, does it have to be under? Because I'll get in that trap. I'll be like, if it's a penny above 200, I gotta wait. And I've been burned before. So have you ever had that happen?
I've
Or
been burned on a lot on that too. So yeah, I've become way more flexible, and especially when it's a quality company. Like I remember, I was trying to buy Apple years ago, and it was like pennies away from my target, and I was waiting and waiting and waiting, and it didn't get there. And we're talking when it was like $88 per share, like before a split. Like so, it's up like 200% since then, and then it never ended up coming back down. So the next time it came back anywhere near, and now we're talking 120s. And I just loaded up then, and now, look at it now, 195. So, and these prices are going to go up and down all the time. You see it now, you're like, wow, look how high it is. But there's going to be some that comes along, and it'll get back down. It could get back down to 140. Like it happens, guys. Like it happens. So I wait patiently.
the opportunity, right? Right. If as long as there's nothing fundamentally wrong with the foundation of the business, or it could be your thesis for buying. If your thesis for buying or the reason you bought any stock is still intact, if that price goes down, baby, that's a good opportunity to add more.
I've got a couple other ones I'm buying right now. Is UPS? It's had some trouble lately. Its yield has gone up to over 4% right now, and it has a 5 year dividend growth rate of 13%. That's a really nice looking combo. And if things are going to be all right for them going forward, like this is a really great opportunity. Like right now in December, right now it's trading for like in the 155s. Like it's been down to low 150s. So I've been grabbing a few shares of that. It's another one that's in SCHD already. But when there's a good company, I'll double down on some good companies that are in there. And I like the fact that it's past the filters that SCHD has for free cash flow and low debt and dividend growth and that sort of thing as well. So it's a kind of another sign of quality for me. So I don't mind.
Quality, it is, dude. It looks like they're getting ready for another dividend increase. The last one was in January of 2023, 6.6%. So look out. They're probably going to be raising that dividend next month as of when we're recording this. And dude, they've been growing that dividend for 13 years and 24 years of uninterrupted for UPS. How long have you been buying UPS again?
UPS, let's go check it out.
One bugaboo while you're looking on that is, as you can see on the screen, their free cash flow payout ratio is at 99% the last 12 months. That's a little bit higher than it has historically been. I don't really follow UPS that close. It does look like it's projected to drop down to about 82% from what analysts are forecasting. But do you know, does that have to do with that labor dispute, like the strike that affecting them? I wonder.
It could be, yeah. I mean, there's definitely something going on, and this is not one where I'm buying a ton, but it looks like a good opportunity. And this long term, I think UPS is going to be around. There's a cycle that happens with them, right? And like right now, they're going to get really busy through the Christmas period. So their next quarter will probably be pretty good, right? With what's happening, unless it's a down Christmas, which I don't think it has been, right? I think so far so good.
Yeah, dude, they have massive return on equity and return on invested capital too. Just knocking it. It looks stupid. Their return on equity, especially, they're at 47% the last 12 months, which is really good, and that is really below what they've been doing as of late, as you guys see on the screen. Unless you're listening on the podcast, you got to get to a TV and turn on YouTube and look. But anyway, so you're gonna tell us how many you got?
Oh yeah, so I actually bought a share today, December 12th, and I only have 8 shares right now. So it's a smaller position. I've got a lot of big positions, so need some smaller ones there too to start.
What's your biggest position?
As far as individuals, of course, SCHD is my number one, but As far as individual companies, it would be Apple. Apple's a pretty good size for me. Again, like because of that lesson I talked about, when I missed the price, when I was so strict on trying to wait for it, when I got another opportunity when it came down, I really did take advantage of it.
He keeps learning, everybody. That's his trick.
I try. I try. I make tons of mistakes, like we all do. But I really, I've been investing like this on my own since about 2018. So I've made tons of mistakes. So you do need to learn. And
Absolutely.
I read a lot, and I listen to a lot of podcasts, a lot of YouTube videos, and there's good information in there and there's bad information there, and you got to learn to sort through all of that. And then you got to learn some of your own kind of style, like you were saying. Are you strict with certain rules you have? And I've learned to be a little more loose, because maybe that rule I have is it even really a good rule? Like, it might not be the greatest rule. So sometimes you got to be a little more flexible. And I do watch the market a lot, so I just kind of, sometimes I get a feeling like, this might be the last chance to get this while it's low, because something good is coming. Like, or I'm going to wait because it feels like things are really bad and things are going to get worse. But what I always try to remember is that things can't get worse forever. They typically do get better. And I think people need to remember that like a lot of the news we listen to, all that stuff is all about attention, and they're always trying to scare you. But generally, the world gets better. The world gets better. Every day, things are a little bit better than they were in the past, On the individual level, sure, there's little things here and there, but it's a good time to be alive, man. Today is the best day.
I wholeheartedly agree, man. And it's a funny thing. I know we get into those mind bending things, but there's only one place you can ever only be, and that's right here, right now, in this very moment, this very second. That's so great. And yeah, I was going to tie it in and say Charlie Munger, God rest his soul, always said your aim should be to go to bed a little bit wiser than when you woke up in the morning. So that's kind of something I try to take to heart. And I try to go to bed wiser when I was. So we do that by learning, right?
And the last one I've been looking at right now, or I'm buying right now, is J&J. Everybody loves a little bit of J&J. It's down a lot right now too. And this is an interesting one, because when it got up into the mid 160s, maybe a few months ago, I actually sold a good chunk of it, and I was gonna just move it all into VYM, because I was like, that ETF kind of moves a lot like J&J. It's got it actually has a higher yield with a similar dividend growth record. And it's the same kind of like solid, consistent, acts well in bad times and just slowly grows. So I was like, you know what, let me just move it. They've got all this stuff with these lawsuits. But then when I started thinking about it, I was like, I've made that money and now it's so much lower. Maybe I can start buying it back and see how it goes, because now I think they've got some good room to grow that price. So it's looking better down where it is right now. And what we've seen before is like when they actually do settle these lawsuits, even though it's a massive number, they could be paying $9 billion in settlements, but the stock price will go up. There's a lot of opportunity like above. So I think a lot of the fears are priced in, right?
I think so too. And yeah, looking at their dividend growth, it's just crazy how this chart looks. That it's just, it's probably the most consistent dividend growth I've ever seen, or that I'm aware of. Over the past 60 years, they've grown it. 107 years of uninterrupted dividends. Yeah, 9% 20-year CAGR, and their last increase was 5.3% in April of 2023. So solid and steady. I've been accumulating. I've been buying more in our taxable account. So I finally sold out of Intel. Of course, when J&J was in the like 147, 148, 149, I was buying quite a bit. And I was thinking, like, because I had like $3,000 left over and I'm still holding on to it. I was like, I should just put it all in right now. But I'm like, yeah, but next week we could be at like 142.
Yeah.
And then the thing went up to like 159. And I do a little bit of chart reading. It's kind of, a little bit like astrology, and looking at the chart upside down, left, right, backward, forward. It told me that J&J was probably going down to the low 150s. And yeah, we're right now at $155 a share. It closed that today. I don't know. I'm trying to work that out. That's one of my idiosyncrasies, is that I get a price in my head, like, okay, like 151, 152. And here we are at 153 today it went to. That's the thing with these drug companies, is that you don't know what drugs in their pipeline are going to be the next blockbuster drug. So you just buy them when they're at a good valuation, when you think they're cheap enough, and just hold and wait.
And and that's exactly what I do. Like, I have Merck, I have AbbVie, J&J, and Amgen. I bought them when they were down in like 2021, and just hold and collect the dividend, wait for it to come back down and buy some more. So you just kind of ride the wave. But I don't even think about them. Like I just wait till they come back down, and when they come down, and if it's not looking good, well, oh well, you could sell, but generally they start coming back. Like you never know, like you say, you never know when one's going to just have this blockbuster drug and they just blow up.
Oh, and this dude, the same thing. When you mention AbbVie, don't listen to people on Twitter, on stock twits, on the internet. I mean, you can take their opinion, but one of the mistakes I did, and this is a lesson I had to learn, was on stock twits. I like stock twits. Sometimes it's kind of crude. It's just like a bunch of like seventh graders as if they were talking about stocks. When AbbVie purchased Allergan, they took on, it looked pretty expensive at the time, and I was going to buy more. The market didn't like it. The market punished them for it. Dude, they went all the way down to like 70, the mid $60 per share. And I remember this one dude on StockTwits who had a big following. I talked with him a little, and he's like, man, he's like, I've seen this. He's like, this is going to like 20, $30. He's like, I might consider it there. And I was like, well, I'll add a few more. I added like 2 or 3 shares, and I'd still look at it at like $66 a share. And now I look back, I'm like, dang it, why did I listen to this guy?
Yeah.
You know what I mean? So it just goes to show that people, even when they are 100% certain, nobody knows what's going to happen. And I think that's what makes life so damn interesting, man, is nobody
Yeah.
knows what's going to happen.
And that's what, and that's what makes it so hard to buy. Like everyone says, just buy low and hold, buy low, sell high. But it's very difficult to buy when things are low because everybody's like, you're crazy. They're dead company. They're this and that and all these headwinds. Sometimes if you believe it, you just got to go for it. Right. And hey, and we're not experts here. We're shooting from the hip here too, a little bit. So, do your research. But if there's a solid cut, like use some of that, our guy, what's the guy? Buy what you know.
Peter Lynch.
Peter Lynch. I started out investing like completely his style without really knowing anything. Those are still some of the best picks I've ever made. Like I worked in social media. I worked in search engine marketing, that sort of thing. So Facebook, I saw how great Facebook was. I saw what they were doing behind the scenes, targeting ads before people knew anything about that. So I invested, in 2018. Google, I wish I would have invested in Google because I saw how much the clients I was dealing with were spending on Google, but I never invested. I wasn't into it yet, but I would have, that would have been amazing. And it's just like when you have kind of that inside edge, you got to use it. It's something that not everybody has, right?
And it all worked out. Everything worked out. Do it, buying what you know, except for that one time when you put your life savings in a Blockbuster video.
Right.
But he didn't do that, everybody. So speaking of that, trends that you see in your neck of the woods, in your industry over there, like, do you see anything right now that's kind of catching your attention, like got your eye? Doesn't even have to be a dividend stock, just anything.
I mean, Google is one of my favorite stocks still. Google is incredible. They're a really well-run company. They make tons of money. They're on the cutting edge of technology. They've had some hiccups with the AI lately, but they're going to figure that out. They have so much data as far as AI goes. They've been working on AI stuff behind the scenes forever. They're really holding back. I think they've held back because they want to go slow. They don't want to scare people with what it can do. So they've kind of taken a back seat to everything that's going on. And then they try to rush into it to show, oh, no, we really do. Like they've blown it. But that's a great opportunity because the stock hasn't taken off like Microsoft has. My target is a little lower than it is right now. I've been buying that one for years, and that one I've added to when the price is up. And like I bought that one in 2020, right before the crash of COVID, right? So I'm like, oh no, look how low it is. I thought I made a huge mistake. Turns out, I was buying it for like $70 a share. Well, it was 1,000 or whatever it was back then. Price adjusted, split, all that.
Yeah. Yep.
It equals like $70 now, right? So it wasn't a mistake. Like it was the right thing to do. Even like sometimes your stocks go down even after you've made the right decision. So you just got, if it's a good company, you got to stick with it.
Do you think one day they pay a dividend?
They should, with all that cash they have, and if they're buying back shares too, and buying back shares can be just as good as a dividend. But I think at some point when they've run out of ways to reinvest their money and get a good return, they probably would, but that's probably pretty far off with all these new advancements in AI and search. They can still make.
That's kind of like what Berkshire does, right? What like Warren always says when people had asked him if they would ever pay a dividend, and he always say, "Well, we would either pay a lot in dividends or we're going to pay none in dividends," because their litmus test, and I think a lot of companies do this, is that if they can turn $1 into more than $1 of value creation, then why would they pay a dividend? So they'll buy back shares. They would rather do that than pay a dividend. And like he says, well, then you can just sell the shares if you need money. Like there's your dividend.
Yeah,
So would you rather have us pay you $1 as a dividend or add, $2 or $3 of value
exactly.
and then you can sell. So you're getting $2 or $3 as a, dividend instead. But you decide when you want to sell. And it's going to be the raging eternal debate.
Not every company has a Warren Buffett, right? So companies aren't always smart with that extra cash. So a lot of times it's very beneficial to give it to us, let us decide what to do with it. And it's a nice enticement for people to invest in the stock. It's like one in the hand versus two in the bush, right? We're getting that money now. We know we'll take that one. It could be bigger in the future, but it could also, you could go in the bush and those two birds could be completely gone. We'll take a little bit as you go, right? There's nothing wrong with
I love it. Busting out the Aesop. We don't go deep here. We'll go 1,000 years back,
Yeah.
2,000 years back, I should say. Yeah, absolutely. But it's just a lot of personal preference. And you made just a great point because when you have CEOs, they're looking at all that cash. What can we spend it on?
Right.
And then you get like Ultra buying, $40 billion for
Exactly.
Jewel.
Bad acquisitions all over the place. It happens all the time, right?
So what's on your watch list? Are you still watching Truist Financial? That's one I don't really know a lot
Oh
about.
yeah, yeah. Darth Dividend always likes talking about how I suggested that one to him during the banking crisis. It's run up a lot since the banking crisis, so I was buying it right after the banking crisis. What I'd done is I tried to make up for a mistake I made. Well, I felt like it was a mistake. I had bought a bank ETF, so of course it got destroyed. But what I did is sold it for tax loss, and then took the money I had and bought TFC with it, Truist Financial. And so far, it's been an excellent move. It's up like 19% since then. And it's even come down a few times again and given more opportunities to buy. I think it's around $35 today. I mean, can you see what it used to be? It probably used to be in the 40s, 50s.
Yeah, it was as high as
Right,
$50.39, low of 26.21.
right.
That was obviously early back in February. But yeah, dude, so they've got 10 years of dividend growth. They're gonna have to raise their dividend here soon
Yeah,
because it looks like they're frozen.
yeah.
They've missed two, or they haven't raised when they should have, two dividend payments ago. They got a little bit of wiggle room until they lose that dividend growth streak.
But they're already paying, like right now, they're paying an over 6% yield. And my yield on cost is 7. Some of the things I looked at when I invested in it was with all the fear. And I started looking, okay, how's the, deposit to debt that they have and all that sort of thing. Like how underwater are they on their money that's locked in at low interest rates? And it wasn't too bad. How much are they into commercial real estate? It was fairly low. They actually even had a huge insurance side of their business, which isn't as affected by all this. And in fact, can benefit from high interest rates because they're holding a lot of cash. And I found out they have one of the biggest insurance companies in the US within them. And they actually might sell. That'll give them some more money, which would allow them probably to increase their dividends. So the other thing was the book value. I've heard Warren Buffett talk about banks, and the saying was, if it's under 1, the book value is under 1, it's probably a good time to buy, and over 2 is a good time to sell. And they were at that time, and it's probably still under 1. It was like near 0.5. It was somewhere between 0.5 and 0.7 when I was buying at like $28, $29 a share. So I bought again at like 32. So if it comes down again, I would buy, like it's pretty close. It's 35 now. I'd buy again, definitely under 30. 7% yield on cost. So even if they don't grow the dividend, that's nice.
I'd say you bought with a pretty good margin of safety there. And yeah, that's something to think about with a lot of the banks is that are they going to face depositor flight risk? And that's like the big thing, because if people want their money, then they're going to have to cash in the treasuries wherever they have those long-term holdings, which traditionally was safe. But that's the old thing, man. That's what kills banks, right? Is if you have depositor flight. If everybody starts pulling their money out, that's when the banks fall apart. But that's an interesting one that I'm not very familiar with. So if you're watching, that might be one to look into if you want to look into some banks.
Yeah, and banks are always tricky, right? Because if you look over the years, some of them have not done a lot. They're really affected by the economy and, different laws and stuff like that. So a law could come down that could just really affect how much money they make. So if they're required to hold on to a certain amount of cash, and that can totally affect revenues and that sort of stuff. So it's one of those ones. A lot of people avoid banks completely, but I just think that crisis was a good opportunity for the right banks, right? They were one of the bigger of the regional banks too. I think they were the fifth or fourth biggest bank. Sorry, I think they're the first or second of these small banks, right? The regional banks.
Good. So what else? What are you looking at here as we're wrapping up?
Yeah, I mean, the top stocks I'm always looking at: your Microsofts, Google, Apple, Mastercard, Visa, Costco, McDonald's, Pepsi. Those ones are just permanent on my watch list. And if something wacky happens, I'm buying. And I've done that for years now, and it's worked very well. So when there's fire in the streets, there's blood in the streets, and fire in the sky. Those are the stocks I look for. You should always have a watch list. When the crap goes down, what are you going to do? And I lean on those. And then, of course, there's SCHD. When the price comes down on that, I'm always buying it. It's usually a great value.
For me, it's Costco. Costco just is hit the last couple of days of we're recording this, hit 52-week highs. And it's just one, my wife and I were there on Sunday. It was crazy, dude. It was just, the parking lot was slammed. The building was slammed. Everybody was there. I mean, I told her, I was like, why the hell didn't I invest in this like 6-7 years ago? I don't know.
You talk about stock reading. So I was learning about trading in 2022, and there was when the Ukraine-Russia war started, Costco got down to like $400. So instead of buying, I was thinking about buying, but then I was just like, whoa, I could go so much lower. I was learning how to short. And I'm like, oh, and I was trying to set up a short for Costco. Like, what was I thinking? Like, just buy it, man. Like, I could have made a few bucks.
Buy it, hold it.
Like, who?
That's what I love about what we do as dividend investors. For the most part, you just buy and hold, and you hopefully never have to sell. Like, I'm like, I can do this. I can buy and I can hold and just buy more if it goes lower. So what are you doing with SCHD? What are you up to now? How many shares?
Yeah,
What you
so
got?
we have to
there?
check the records, what I was at the last time I was on the show. I think I was around just over 1,000 shares. And I think the first time I was on, I was around like 500 to 600. 6 months later, I was over 1,000. And now I'm at 1,550. I haven't bought in a while since there was a nice dip in October, November, and then it's been steadily improving since. So when it was under 70, I was grabbing a ton because I was going to stop at 100,000 value, right? Or at least slow down. But the prices was too good to refuse. So when it was anything under 70, I mean, just back up the truck for me.
Now SCHD just paid their dividend yesterday on Monday. So did you drip that, or are you collecting that dividend to buy?
So I will eventually. I hold on to it and I manually invest it when I see a good opportunity. And I mean, I suggest most people just drip it, like set it and forget it, because I look at it every day and I kind of follow the patterns. I look for a good opportunity to jump in, and it might not work out for me, but it has so far. It tends to trade in a channel, and when it comes down closer to 70, that's when I would reinvest it. I mean, it's only 73 something right now, but
dude, I think we could talk charting, because I didn't buy J&J when it got up to 159 because I looked at the chart. I have a couple technical indicators I like looking at, like CCI, the commodity channel index indicator, the RSI, and I was like, I have the 50-day, the 100-day, and the 200-day moving averages, and just looking at the chart, I was like, I think J&J is going to peter out right around 160 and come down. Sure enough, it did. And now I'm looking for it to come to about 152.
I think I have an order set for 151.99. We're right there. I think I'm following a little bit of that magic voodoo witchcraft too.
That's the thing about the charts, because now we have so many computer algorithms in and they follow that, and it kind of can be a self-fulfilling prophecy in the short run. But the thing with the chart, it's not going to tell you in 5 years from now what the price is going to be. So I think charting can show you like a good, maybe you want to wait for a better entry point based on what the price recently has done. I like it. I look every day. I'm fascinated by it. But again, like you said, you could get too caught up into it, like thinking, no, this is what is going to happen because of the chart.
And then whenever things go down, like whenever SCHD is down, people on Twitter the trolls will start coming out and being like, it's going to 50, it's going to 35. What are you doing buying? You're crazy. And I'm like, okay. But it's still, you think about it too. You're like, oh, could it? because when things are going down, it's tough. It really does feel like it's going to keep going down. But especially with an ETF, like these things tend to rise back because all the good stocks in there, it's going to bring the whole ETF up, and the bad stocks will fall out and affect it less. So at the end of the day, I still buy more S&P index than anything else. Like that's my number one investment when we took a look at retirement accounts, like by far. I'm more of an ETF and chill person than anything. But I do like to play around with charts and these stocks when, when they kind of drop. Try to, beat the market by adding a little stock here and there, right? Have some fun.
Yeah, same here. Same here. I have we have the bulk of our money in just three mutual funds in our 401k, and then the what I've started sharing on the channel here. This is kind of starting to grow pretty big, and I start to worry like, man, do I really want to? That's why I started putting more into SCHD and the Roth, which we can start contributing to once again once January. To the first the markets closed hits. But yeah, and for those of you that are listening and watching, one of the great things about dripping is when you reinvest the dividends automatically is that it forces you to buy more of something when the price is low and less of it when the price is high. And you don't even have to think about it. I'm actually going to be making a video just for two people to watch, for both of my daughters. If I were to get hit by the proverbial bus, what would I want them to know and do? Spoiler alert, it's going to be just VTI. Just put your money into VTI. If you look at your town, buying an ETF is like, instead of trying to pick an individual store or two, which you think are going to do great, when you buy the VTI or something like that, the total market, you're buying a small little piece of every business in the town. And if one little business goes out of business, puts the for sale sign, and then somebody else comes in, like, I don't know, the new flower shop or whatever, boom, automatically you're entitled, you're going to get a piece of them. So it's just such an easy way for people that don't care to learn investing or don't want to know how to do it. You can become an automatic
And it
millionaire.
beats so many funds and managers that you end up paying. They like a small percentage might beat the market, but then you end up paying them that difference anyways. So you're no better. We can all try, but really, that's the way to go.
All right. Well, so what's one thing we're gonna wrap it up with something you're watching? What are you watching, listening to, doing?
Oh
That's
man,
maybe stock related. What's something you like? Quick.
yeah. Well, I run like crazy. I'm a runner, so I'm training for.
You don't like those new on shoes, do you?
No, I'm not into them. No, not into.
Yeah, I have a lot of runners are saying they don't like them.
I think they're more of a fashion trend than they are for runners, but they are getting better. I hear they're getting better for runners, and I haven't personally run in them. I've put them on in the store and didn't love them. Like I have the brands that I like, the Nikes and the Saucony. Some people say Saucony, but yeah, I love to run. So I listen to a lot of running podcasts when I'm not listening to stock podcasts. Yeah, and I'm into like sci-fi movies and that sort of thing. And trying to think of what show I'm watching right now. Oh, I'm into The Boys on Prime. You ever watch that one? It's
No,
like
no.
they're like it's like superheroes but R-rated.
I think I've seen like the first season of one of them. There was one that was superheroes that like they drank and they were just not necessarily good people,
Yeah.
but they had these super
It's
abilities.
really smart. Like it's well written. It's like it's all like everything they do is for marketing. So like they try to put on a good image when they're in public, but it's all their publicist runs everything and they're just complete jerks behind the scenes. And of course some of them are good and bad and it's interesting. And then now there's a younger one where there's people in college and it's called Generation V. That's the one I'm watching now.
Oh boy.
It's not for
I
kids though. It's X-rated stuff.
I might have to check that out. I appreciate
or
it.
R-rated.
Nice.
Not X-rated, R-rated.
I was gonna say it's Amazon Prime's really going dark quick, huh?
Yeah.
So speaking of X, where can people find you?
That's right. Right down there. Over here. SCHD ETF.
There
Or
you
just
go.
search for SCHD Stan.
Yeah, hit him up. He'll talk to you if you hit him up. Find him on Twitter. Give him a follow. And yeah, you have any parting words till next time?
Yeah, just keep holding on, man. People come to me about SCHD all the time. Oh, is this going to get back? What's going to happen? What's the future hold? And I just say, in 10 years, it's going to be worth a lot more than it is today. Don't worry about it that much.
There it is. We'll leave it there, man. Thank you so much for coming on again, and we'll talk to you once more sometime down the line in the future.
Always look forward to it. Thank you.
All right. See all y'all in the next video.